Welcome to the 2026 Orange County real estate market. Is this going to be a great year? Is this going to be a bad year? What kind of year is it going to be? Well, we're going to talk about that right now. We're going to show you what the data is pointing to right now. So let's go ahead and get started. This is Dean Odell with 7 Gables Real Estate in the Odell Group. Today is January 9th, and we're going to go to the slides right now. So looking at the active listing inventory, you can see we are going to be starting a new line. You can see the previous colors in the previous years that corresponded to, and we are where the orange dot is right now. So today we have 2,703 homes. That is down from 3,159 2 weeks ago because so many people took their house off the market for the holidays, right? And last year we were at 2,401. So, hey, there's a plus for the buyers. You got 302 more homes to pick from this year than last year, right? Still down quite a bit, almost 2,000 homes from pre-COVID when we had a lot more inventory for buyers to choose from. But I think what we're gonna see is we're at a lot more buyers too. So let's look at demand. Okay, now looking at demand, you can see we're starting at the orange dot right now, starting a new line, and you can see how we compare with the previous years by looking at the colors and how they correspond to the years. Pretty much the same. Last year, 953 homes. Today we're starting with 951, right? That's down 2 weeks ago, 1,149. And if we look at where we were with the 3-year average, 1,349 homes were in escrow in a 30-day period. But you got to remember, like we said before, there were 2,000 more homes on the market. So, to get that extra 400 sales took 2,000 more homes. So let's see how this relates to expected marketing time. And when we look at expected marketing time today, it's an average of all the price ranges. We're going to see that there's 85 days roughly in expected marketing time, which is up just a tad from 2 weeks ago, and it is slower than last year when we were at 76 days, but still better than the 3-year average prior to COVID when it was 104 days. So looking at that now by price range, what you'll see is it's really still a slight seller's market all the way up to $2 million. Now this is gonna change pretty quick in my opinion because we're gonna get a lot more inventory that's gonna hit the market in the first 30 to 60 days. So we're gonna have to keep our eyes on this. And then it's a slight buyer's market, they say from 2 million to 4 million, and a deep buyer's market from 4 to 6. So when you look at this chart, you can freeze it here for a while. Look at the marketing time now versus last year. Look at how much percentage of inventory is in that price range relative to the demand in that price range, which is in the column right next to it. So take a look at that, study it, give you an idea where you are in your price range, and we'll move to the next slide. So I like this next slide because this is a look in the rear view mirror here, as I would say. We're going all the way back 2017 from 2026. If you go ahead and you just follow the lines vertically, so we're going through the years from 2026 to 2017, you can see how this inventory has changed over the years. So same with demand, same with expected marketing time and mortgage rates. You can see how those all relate when you look at them side by side by side by side. And what you're going to notice is since 2000, let's call it 23, okay, because rates were still pretty low level in 22, right? We had a 3.22% rate. You can see what's happened. All of a sudden they just jumped. And from that time, demand really hasn't changed. I mean, if you look at the 2023 demand, it was 900. And now 4 years later, we're at 951. Okay, if you look at the inventory levels, that has changed quite a bit. Look at the active listing inventory. It was only 1,100. Now it's 2,703. So you can see how the inventory has just slowly increased every single year. And you can see where rates are now at 6.19. And we're going to talk about what that might mean for this year. But you could freeze this chart and take a look at all these numbers. Kind of interesting if you like numbers, that's for sure. And you'll see how things have changed. So now I'm going to give you my buyer and seller advice, and we're going to talk about where this market is headed. Okay, so interesting data. What does it mean? Okay, this is the trickiest time of the year. When we go out and we talk with our sellers, we're reporting what happened in the last 2 months, and often they're not even going to hit the market for another 2 months. So, you get 4 months difference between like the data we were looking at versus where we might be in the marketplace then. So depending on when you're listing, we're going to go through this with you guys and really review, say, the changes from the winter market into the early year market. So if you're a seller I would err on the side of caution. This is not 2021-22 where, you just throw your house on the market at a high price and the market's going to absorb it and catch up with it. It's just, we don't see any reason for prices to run higher. If anything, we're hoping that they just stay pretty level, maybe a couple percent up, but there's just not enough demand out there to create a situation that's going to make prices go up. Now, the only way we're going to get more demand for the sellers is going to be if interest rates drop. If interest rates drop and continue to drop, let's just say they got into the fives, we might get a surge in demand. That might help the sellers out, but that's going to be counterbalanced by the time of year it is, which is we're coming on the market after January. So all these other sellers are going to be coming on, right? So how is the demand going to exceed the amount of supply that's going to come on the market, say in the first quarter of the year? I highly doubt it. I don't think there's going to be more people buying houses than there are going to be listing houses. We haven't seen that situation for a long time. And every year the supply just gets bigger, bigger, bigger. The good news is the demand and the supply, in terms of how they've related to each other, have stayed in a situation that's created a pretty good market, a pretty fair market now. So we're going to see what happens. What else can increase supply? Well, obviously jobs, bad jobs report, that could decrease rates as well. So that's the only thing that might push prices if there's more demand created. But we've seen interest rates drop 100 basis points in the last year and demand is still the same. So I'm not too sure that rates are going to make that big of a difference. I think we have more of an affordability issue than anything else. I mean, look at what the income has to be to qualify for a home these days. It's pretty crazy. Anyway, unless people are rolling a lot of equity, and even so with the cost of property taxes, with the cost of homeowners insurance, fire insurance, all that stuff, everything's gone up. So it's just gotten more expensive to own a house. The buyers realize that, and that's why the demand has leveled. So hopefully you can't hear that ambulance in the back, but maybe you can. So anyway, okay, so now we move to the other side of the equation, which is our advice for buyers. And as always, we tell buyers, look, when you buy a house, you're not speculating on the future value of the house. Unless you're a professional flipper and you're going to flip a house, which I definitely do not recommend in this market. Unless you're a flipper doing that, then what you really ought to be looking for is the long term, not the short term. Okay, so buy for the long term. There's great houses that come up in great neighborhoods. When they do, you're not going to be the only buyer out there that wants it. Realize that. So figure out where your comfort level is, what you're willing to spend. We can help you prepare for that. We can educate you on the process. Just give us a call. Sellers, same thing. We know how to get your houses in great shape to get you the most money. Go on our website, look at the homes that we do. You'll see a lot of examples of before and afters on there. And if you have any questions, reach out to us. Just give us a call. Anyway, so that's it. We will see you guys in 2 weeks on the next Tustin Talks, and hopefully we'll see some kind of change in the data here that, is somewhat exciting, because right now everything's just kind of staying normal. All right. We'll see you in 2 weeks.